Fantastic. Thanks very much, Craig. Appreciate it. And there's nowhere for your kids to go right now, so you don't really need to track them. But when we all get through to the next stage of this, this is going to be a key point of it. So my name is Alex McDougall. I am the co-founder and CIO of Bicameral Ventures, which is a Toronto-based venture capital platform, effectively founded on very similar principles to what Patrick has been talking about, this idea of interconnectivity, providing a framework for multiple different solutions to solve the big, chunky, intangible problems of today. And so I actually want to turn it over to my panelists to introduce themselves. We've got a really strong panel of experts today. Unfortunately, Shakur couldn't be with us today, but we have the rest of the team, the A squad here. So I really want to tie it back to that presentation because there's a lot of really interesting pieces there. And I think those kind of three layers of identity, trust, and finance line up extremely well with what our panel is talking about today. So I'm going to go panelist by panelist just to do a quick intro of yourself and also your thoughts on the thesis that things don't always get better unless there's some kind of catalyst for it. So let's start with Roberto.
Well, I wasn't expecting to be the first one, but thank you, Alex. So I'm Roberto. People usually call me Rob just for the sake of simplicity, and I'm Chief Operating Officer and Chief Compliance Officer for Stablecorp, also a Toronto-based company that works on the stablecoin and crypto asset industry. And just, I think, quickly touching upon your nudge there, Alex, regarding the concept that, things not always improve. I think I'm here to, in some sense, talk about the financial services industry, and I've been a banker for a long time. So certainly on that industry, things don't always improve. I think it's kind of the overall trend is positive, but there are a lot of moments where either it plateaus or even go down a little bit because of either new regulations or new threats. So threats also innovate, and then sometimes they make the whole industry step back. So I think we can elaborate on that, but I certainly agree the improvement is not steady and continuous, especially not in the financial services industry.
Fantastic. Thanks, Rob. Let's introduce our second panelist, Karyl Fowler.
Hi, so I'm CEO and co-founder at Transmute, where we also use blockchain and decentralized identifier technology in applications around global trade and supply chains. We've had the pleasure of doing some really cool interoperability work with Mavennet under some US government work. And I think that my kind of response to that thesis is that at the end of the day, each of these technologies, while they can add tremendous values, they're just some tools in our toolbox. And so understanding what the customer needs are, as well as understanding the broken processes that are already there, that you're about to lay new tech on top of, is really important. So there's definitely a situation where you can apply the technology or codify faulty processes that don't actually lead to achieving the efficiencies and kind of visibility gains that you were hoping for.
Fantastic point. Yeah, and completely agree. And that's something I want to talk a lot about in this panel is the idea of where are we today? Where we've built all of these pieces of technology, we've built all of these digital islands, and we have all of these major enterprises all sort of dabbling and testing and doing pilots and exploring a little bit. But where are we really today, and how do we kind of move it to this utopia is such a loaded word, but this vision of the future that we all have going forward. So given the blockchain, a ton of the value of blockchain is based around this concept of kind of solving collective action problems or collaborating to create a bigger pie for everybody. But we work in such a competitive world right now where everybody sort of has this fundamental framework of competition. How do we move forward in that? How do we start to get these fundamentally competitive actors to start collaborating instead for the greater and longer term good? And maybe I'll turn it over to Patrick to sort of build on that thesis of collaboration over competition and how we get there.
Yeah, thanks, Alex. So I think kind of the analogy for me on where we are at right now is that we have done a lot of great stuff, both on the business side, on the technology side, a lot of different islands of work. But we're still trying to put it together. We had successes, but we're feeling a bit of that prisoner's dilemma situation, right? That everyone wants to run and get the whole prize for themselves. And what's happening is that we would be a lot better off if we had happened to coordinate and collaborate. And I feel like we're a bit in the internet of the 90s, where the ingredients are all there, right? So, but right before internet happened, we had HTTP, we had TCP/IP, we had the ability to create websites. But still, and that's for me very close to home, because my father was there in that process as internet was created. He created one of the first BBS, bulletin board systems, and then one of the first internet service providers in Brazil, and so it feels a bit like that, with the difference that now our imagination is a lot stronger. So we're thinking about already what are the applications, the killer applications that are going to take us, to the next step. We're already thinking about the Googles and the Facebooks and of the future, right? And the problem is that each one of us is making a business case for that specific application, and all the building blocks to make that business case are carrying the weight for one single business case, right? And so to me, what needs to happen is that we need to coordinate and think, well, it doesn't make sense, just again, following on that analogy, that in order to create Google Maps, that Google Maps carries the burden of the business case of creating the internet underneath, right? So we need to start putting together those business cases at high level and cooperating, working to be able to drive those in a way that's efficient. So on the business side, cooperation between business case and ideas, it's important. On the technical side, cooperation to create standards, to create that fabric for us to be able to communicate is important. And so I have a lot of use cases or a lot of ideas why we shouldn't go independent on each one of these things, aside from the monetary cost. But I'll pass it over to anyone else to comment, and I'll circle back if we have the chance later on.
Sure. Yeah, I think it's a fantastic point, Patrick. This idea of the full stack of investing, and each layer has its own unique business model, has its own use cases. But to get to that, customer, that user or enterprise facing experience that people actually touch and feel, we need the tooling layer, we need the infrastructural layer, but we only need the bits of it that allow somebody to realize a visceral value proposition from this core technology that's buried so much deeper. And that's exactly right. And I think a really interesting evolution of the 2017 boom was that the best app developers realized that they needed to start, not even at the ground floor, but at like the center of the earth to build themselves up tools to have even any sort of functional idea. So I'll turn it over to Karyl to kind of keep building on that idea of how do we get these fundamental competitors to collaborate, and how do we sort of build that full stack?
Yeah, thanks, Alex. So I think kind of my immediate reaction, which I know I've talked to Patrick a lot about, is that part of collaboration when you're talking about decentralized services is ultimately the end result is a larger market for all of us and a better user experience. It's why things like interoperability are often at the core of some of the foundational layers that you mentioned in the architecture. And my favorite example of this, just to kind of draw an analogy to a totally different industry with decentralized services, is at least here in Austin, Texas. I don't know about Toronto, but the scooters that have popped up everywhere. So it's one analogy where this is, the users are kind of, they need to get from point A to point B, and their experience is much limited if they go with just a single service. So in our space, we think similarly about wanting things like wallets to interoperate and some of the components, the nuts and bolts of the products to interoperate so that we can support a good user experience that ultimately accelerates adoption. So I think that's the first thing. And then the second thing Patrick also already mentioned, which is standardizing some of these things. So standards, again, since the advent of the internet, have accelerated adoption because they've made it easy for people and companies to adopt. And so I think continuing to hammer down kind of that side of things has been really, really important. And we're also, I would say, early adopters really care about those levels of the product.
Yeah, absolutely true. And I think it's sort of our job as an industry to get what we can and what we need from the early adopters, and then harden that and catalyze that into sort of growing and growing and growing till we're at the level of usability for grandma, or leading into the next question, the corporate version of grandma. So thinking about kind of the OG enterprises out there who have, some are still operating on mainframes and have this really, really antiquated technology. And being from Canada, not to specifically shout out our banks, but there's a lot of different legacy technology that's working in there. And with something that's as low level and foundational as blockchain technology, obviously it would be fantastic to just rip and replace, start new. But as anybody who's tried to go through the enterprise procurement cycle knows, that's effectively a non-starter. So how do we meet our legacy enterprises where they are today and start slowly evolving them along this path? And Rob, you've spent a long time in the financial sector, so maybe I'll start with you on this one.
Yeah, I think that's a great question. And to be honest, I've been hearing that question for, I wouldn't say decades, but at least 1 decade, because I think that problem has been there in the financial industry since the late 80s, I guess. And then the 2K bug was the first time that they really, jumped into the problem. And to be honest, I don't think a lot was done since then. So I think the first part would be to understand the mindset of the financial services industry, right? So if you go back 10 years ago or 15 years ago, the most valuable companies in the world was either oil and gas, which Patrick was talking a little bit earlier, or banks and insurance companies. So they were, on top of the world. They would decide whatever they wanted to do, highly profitable, highly influential on regulators and lobbyists. So it's a company that didn't have a external drive to innovate. And that kept, I think, being the same for a long time until recently. Some of the e-commerce service provider, internet provider started doing 2 things. One, offering clients a interface and a user experience, and Karyl touched upon that is, hugely more pleasant and efficient than the banking and insurance interfaces. And the second thing, which I think was even more important than simply offering a better service, but the fact that they started, slowly eating a piece of the pie of the financial services. So when PayPal started offering payments, when Square started offering merchant payment processing, when Ant Financial from China went from collecting coins from changes to be a $500 billion asset manager, then that started making the banks stop and think that they potentially need to do something. So I think financial services is a very resistant industry, and they are not that way because they're evil. There's a lot of incentives to being resistant. There's huge regulation. The risk of going down has a systemic risk for the whole country, right? But we got to be honest that they also have this position of being able to keep profitable without too much innovation. So not trying to go too long on this. My take on how collective innovation is going to take place in the financial services industry, it gotta be through some sort of competition disruption or competition provocation that comes from the outside. Either by, Apple, Facebook, Amazon, whatever, start offering financial services and actually becoming a problem in the strategic vision of the banks, or small disruptors coming with new, really effective technology and getting acquired by a big bank, and then they implement the technology and then it starts becoming relevant to the other big banks. So I think on our end, and I'm wrapping up, JP Morgan was the first one implementing blockchain for effective business problem solving, and they're clearly enhancing their portfolio on blockchain because they're seeing that this is really profitable and interesting. So I think JP will actually trigger Citibank to start doing something that potentially might trigger, another big bank to do something. So I think this is how things work on the financial industry, and hopefully we're going to get there, not as fast as other industries, but I hope it keeps moving forward.
I love that. That's our take on Canadian banks is like, yeah, you just get acquired by a big bank, and then that's the distribution mechanism. And that's effectively how the industry, like that's how the Canadian fintech industry evolved. It's all these, we're going to take down the big banks, and then you partner, and then you get acquired, and then your service shows up under a white label not too long in the future. So that would be really an interesting way, and agree with your point, Rob, of it's not going to be you can save 1% or 2% on COGS type of infrastructure that's going to change. It's going to be, this is an entirely new model that can eat your lunch, that's really going to catalyze change, especially within such an insular network as the Canadian financial system. Karyl, I want to turn it over to you because I know that Transmute's done some really interesting thinking on this piece, and not specifically on the financial sector, although the American financial sector is quite a bit different and more competitive and has newer solutions. But we'd love to hear a little bit about how you guys are thinking about meeting current enterprises where they are today.
Yeah, so I think you said it well in the introduction to the question that not kind of an extreme aversion to not having to rip and replace or disrupt your existing architecture infrastructure investments is kind of the name of the game. So I think companies are definitely innovating and they're willing to experiment. But if you actually want something or technologies like these to move to production, you have to build on what's already there. So and part of that, it needs to feel like they're not risking those investments or the existing way of doing things. And so we've spent a lot of time thinking about how to implement a really modular architecture that is open to integration with legacy systems as well as things like public-private cloud storage, because every customer, at least every enterprise we've worked with to date, is using some or multiple of those things. And this helps them experiment with the value of the technology and the enhanced kind of efficiency or traceability, while also getting them comfortable with exploring some of the really, I guess, cool things that they can do with their business model once these things are implemented. And so I think we've come really just from kind of a pragmatic place where we tried to sell some of these products in a vacuum without integrations to those legacy systems. And we found that just that kind of halted adoption or interest right at the gate.
Interesting. And Patrick, just quickly, I know we've covered a lot of the nuts and bolts of how to do this. You've had some success with breaking in some really, really next generation pilots and solutions, including the solution you just demoed as well, MetalTrail, or NeoFlow rather. What's been the sales cycle like on that? I mean, without sort of giving away any competitive juice here, but how do you find the right people to talk to? How do you position it in terms of what their value proposition is?
Yeah, and so let me link that to the rip and replace, because it's related. One thing is related to the other. And what we're doing, it's actually, we're not ripping anything. So a lot of these companies have invested lots of millions on doing digital transformations, and most of them, they've done a really good job, right? So where we're focusing on is in what's between the islands, right? And it's something completely new, right? So if you do the analogy with the internet, the internet allowed you to connect a bunch of intranets, and then once you connected a bunch of intranets and could do a bunch of new things that you could not do before, you started expanding using the same technologies to existing legacy technologies, and I would say ripping them after the fact. So for example, the telephone, right? So no one started thinking, okay, we're going to come in with this internet technology and we're going to replace all of your phone lines and everything from scratch, right? So you started working first on where are the actual big gaps, and then working your way back into how do you replace legacy for the better. So from that perspective, and now for banking, it's partially a bit different, partially also the same, right? So covering some of the gaps, but also some of these gaps overlap with existing products. So it's a bit more complex, but that's kind of the idea and the thinking, right? So any kind of these solutions, again, going back to where we started, needs to be treated a bit in collaboration with a bunch of different companies, creating either a community of the willing that wants to go towards a better future, or you have a big backer that can be a government, it can be some kind of regulator that thinks along those lines and supports you and backs you, right? To help organize, to help create a better future. So going back to your original question, yeah, a lot of it has been finding the right individuals with the right vision, with the right initiative, and then aligning government organizations with companies to be able to take things up one or two levels.
Absolutely, and that's the key point I want to focus on next is, okay, how do we take things up one or two levels? A government mandate, as diluted as it is a lot of the time, is theoretically to solve collective action problems, to move the pieces around the board, to push the buttons, to change regulation, to reorganize things so that everybody's better off, where individual competition would make everybody worse off. So how do we sort of elevate this discourse, this decision making, this sort of framework layer pieces to the right bodies and the right frameworks and the right organizations, and all of you guys have worked with government bodies at some point in your journey through the blockchain industry so far. Maybe I'll start with Karyl on this one. I know you guys have done some really interesting things with the American government, and just how do you view the role of government in sort of solving some of these friction points and challenges that we're having today?
Yeah, so I view them as a critical player in the ecosystem, and kind of one of the first dominoes that needs to fall, at least when we're talking about global trade or financial services, or things like healthcare, and some of the interesting kind of decentralized identity stuff that's going on there. There's a book, I think, called The Third Wave by Steve Case, where he talks a lot about how technology companies and startups today, when they start to address some of these more archaic spaces, it's going to be crucial that they have regulatory buy-in, or at least have to balance the awareness about what the regulators, or in a lot of our cases, I know in Patrick in our case, the verifiers of some of the credentials that these systems are outputting. You really have to understand what kind of the minimum data requirements and access requirements that they have long before you're going to get the end customers to be bought in, right? And because of that, often the regulators, at least in our experience, are the ones at the table really caring about the technical standards and the things that are open source versus closed source, and kind of what these pipes look like, whereas the end consumers really want it to work at scale and serve some of their business needs, and they're going to defer to whatever the regulators kind of opinion or perspective or mandate in certain cases is. And so I think they play a tremendous role, and all of us have to kind of balance their perspective alongside our customers.
Absolutely. Rob, you've obviously worked in a heavily regulated industry where most people take their lead from, in our case, the CSA, FinTrack, OSFI. How do you, and obviously there's been a lot of central leadership globally in the various pieces to the cryptocurrency and blockchain puzzle. How do you see regulators being able to really move this forward, or what would be the best thing that they could do right now?
Yes, so I think that's a great point. Even when Patrick was talking about it, and now Karyl, I think from a financial perspective, you guys hit the nail on the head. I think the governments, and especially the central banks, are becoming more and more a vital player on enabling innovation. So if you go back 10, 15 years ago, central banks had basically the macroeconomic and fiscal policy as their mandate and prevent things from going, very wrong. But there wasn't much concern on regulating and enabling innovation. And this have been shifting a lot on the past 10 years, I would say, especially in Europe. but now something also in Latin America and a little bit later in North America, in a sense where central banks are actually engaging with the banks, private sector, startups, even NGOs, and trying to figure out how can they help. And just some areas where I see clear evolution, especially in UK and Brazil, which are markets that I track, is on the payment and open data and API interface areas. So those areas, banks were not good on doing it on their own, agreeing on what the payment and settlement process would be among the banks. And also they were far from being agreeing on the way they would interchange with information. And the central banks are playing a vital role, not only standardizing, but also incentivizing, even if it's true, price or pain, but they're being able to put that in place. So on the blockchain perspective, just to wrap this up, I think the CBDC is going to be potentially the key component for mass adoption. If one central bank adopts blockchain as the best solution for issuing, either the debt or the currency itself between banks and central banks, that would for sure speed up the adoption. But regulation overall is also important. We see in Canada kind of this gap in a clear regulation in the crypto space, and now OCC, and even before that, the New York State had been more proactive on that end. And we clearly see banks and other financial institutions being willing to help support and interface with crypto and blockchain companies. And here in Canada, like in many other countries, while you don't have a clear regulatory regime, companies are just going to step back. And worst case scenario, if that takes too long, those international companies are going to come here like they are coming to us and offer their services. So banks from, the Caribbean, Lithuania, Croatia, or whatever. So Singapore. So I think that's how central banks in kind of this new trend should act as a innovation enabler.
Awesome. I completely agree. And I think these bodies and sort of panels and tribunals and things that are being set up to really address and look at this industry and this problem holistically are exactly the right place to go. So I want to leave this. We've spent a lot of time today focusing on sort of today's world and the frictions that we have today and getting existing enterprises and adoptions and all of that stuff. I want to finish this up with a bit of a dream. And in Patrick's nomenclature and parlance, I kind of want all of you guys to talk through your various solutions in words of how a building block would be for the future. So we're going to go sort of by layer of Patrick's piece there. And so, Karyl, if you could sort of spin the dream of 10 years from now for Transmute, and then if Patrick, you can build on that from sort of the trust layer, and Rob wrap it up with the financial services layer. I think that'd be an awesome way to end this out. Oh, Karyl, you're on mute.
Sorry. All right. Hopefully you can hear me now. Just kind of a refresher. We use decentralized identity technology as applied to trade credentials and product data. And so when I think about a future, kind of a decade into the future, I think about what we can do when we have this depth of quality in data across time about the provenance, the origin, the makeup, the whether or not a good is sustainably sourced or ethically sourced, et cetera. And I think a lot about, there's a lot of books and I think literature out now around kind of, frankly, things like geopolitics and like how our supply chain infrastructure is so important in kind of the political landscape and of course in the business landscape. And so I think of a future where the strategic advantages that come with that level of visibility and control over a supply chain ecosystem mean that if you're kind of at the top of that or involved in a network like that, you can be really resilient to things that are happening now, like COVID or other types of disasters that really disrupt the flow of supply and demand. And so I think of these types of supply chains as more of kind of like an octopus instead of like a kind of critical chain, single efficient path from A to B. These things that are businesses that are a lot more dynamic and agile. I'll throw it to you, Patrick.
Go ahead.
Yeah.
Patrick.
So for me, building on that, my vision of the future is that we no longer have a platform for traceability of oil and another platform for traceability of metals and another platform for traceability of Alaskan fish, certain characteristics. At the end of the day, if you think about a supply chain, downstream metal is used in cars mostly, and cars use plastics, they use fabric, they use steel, they use a bunch of different things that come from completely different supply chains, right? So it is unrealistic to think there's going to be one company or one product that's going to cover everything end to end for every supply chain, for every geography in the world, right? So for me, in 10 years from now, we have the equivalent of what we have today in the internet, but for traceability.
Awesome. And apologies, Rob, we're just running out of time here. Do you want to give kind of a 30-second piece to how finance fits into that?
Sure. I just want everyone in the world to be able to send money abroad and invest in products as easy as they call an Uber.
Amazing. Thanks so much, guys. This has been super interesting. I think we talked so much about the various different solutions and what the use cases are and how it all works and all the different layers to it. But this level needs to be up a layer of holisticness and the pieces that are coming out today. And I think there's some really interesting announcements coming out in the not too distant future of this international pieces coming together to really set this framework in place and get us all operating on the same page. So I'm going to throw it back over to Craig with that. Thank you again to all of our panelists, and thanks to putting on this show. This has been fantastic so far. Over to you again, Craig.